Hi, everybody. Scott Riley, the Market Update Desk, March 13th, NMLS number 157524. And the name of the game is still volatility. Yesterday, we thought we'd get a little bit of an improvement in the bond market. We actually improved on consumer inflation by 0.1% on both headline and core, and went down 0.1 more than expected on year over year for both those categories. Did we see a benefit in the bond market? No, we saw a retreat. The reason for that is more volatility in the market, uncertainty regarding tariffs starting off at X, ending at Y, and then retaliatory tariffs. So today we got the partner to consumer inflation report. We got the wholesale inflation report. It was actually much better than expected. The headline PPI was reported at a goose egg, 0. This was cooler than the anticipated number of up 0.3. So year over year, producer prices have increased 3.2%, which is down from an upwardly revised 3.7%. Now, that's 0.1 better than what the markets were expecting. One of the things that's helped this specifically is energy prices. They've dropped 1.2%. Might even see some more drop in those energy prices, which would be nice. Core rate, which strips out volatile food and energy, was, believe it or not, negative for the month. It came in at negative 0.1%, down 0.1. So that was much cooler than the plus 0.3% the market had anticipated. The year over year came in at 3.4%. Now that's down from an upwardly revised 3.8%. Now, did we see benefits again today when we think we should? No, we did not. One of the things that came out today was President Trump looked at announcing a 200% tariff on European wine and spirits. What should have been a good day for mortgage rates is trending in the wrong direction. Now, it's going to be real interesting. We've seen this whipsaw on tariffs, but the bond market doesn't really buy into what's going on as far as maybe using it as a negotiating tool. It's seeing it as a negative with potential inflation impacts. Now, we also saw initial jobless claims for the previous week. They fell 2,000 down to 220,000. Continuing claims, a little bit of a surprise, down 27,000 to 1.87 million. So right now we've got the 10-year bond hovering around 4.33. Our low point for the last week was about 4.22. So we definitely have an uptick in that. Now, we're looking at some of the resistance points in trading, and it looks like we're sitting at the next stop is the 25-day moving average for the ceiling. If we break through this, there's room to the upside, possibly to the 200-day moving average. So we got to be real careful with what's happening. We also have a 30-year bond sale going this afternoon. Depending on how that goes, we'll tell what's going to lead into tomorrow. Also, yesterday, we did see the debt forecast increase, but not as much as the projected. So we're still on an upwardly moving total deficit number, but not as much as originally forecasted. So we'll stay tuned on what's going to happen with that. And then we have Congress going on with a potential government shutdown. So we've got a whole bunch going on. Hold on tight. We'll keep on top of everything and break the news down for you. Give us a call. We'll help you with your pre-approval. Look at, if you're looking at refinancing for rate and or debt consolidation, save lots of money. In fact, we're saving one client $1,250 a month right now. And they're going to turn that $1,250 into principal payments, pay their house off and all their debt in about half the time. Give us a call. We'll use our knowledge to help you out. 616-293-2189. Looks like another beautiful day outside. It's time to buy a house. Take care.